Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Tuesday, the 15th of August, 2023, and I'm early. I'm at 5:20 p.m. Central Time, going out to a great dinner tonight with a group of friends and enjoying, and I'm going to do that a lot going into September. Why not? Summer's coming to an end, and I'll be sitting here cold enough soon enough. You know how that works. The U.S. consumer, if you saw today's retail sales, powerful, okay? Way beyond analyst estimate, almost double what people were looking for. And the consumer continues to spend, go into debt, but continues to spend. It's what they're spending on that's going to be interesting. And, that'll break down over time. We also saw weekly retail sales jump. Now, that's 2 weeks in a row where instead of negative numbers that we had a couple of weeks back, 2 weeks in a row, they've turned positive again. Could it be back to school items? I would assume it is in a big way. Could it be that the market is also looking at Amazon Prime? This was in there. I would assume that's a big part of what this was as well. But we're going to start getting in the market, starting tomorrow, we're going to get Target and some of the other big boys recording, Walmart and the like. Now we'll see how the stores, the brick and mortars are doing. That's going to get interesting. China, a big drag on world markets as their economy just keeps spiraling to the downside. They'll do their typical thing. They will tell you that they're not going to publish data on certain things. This is something that they uniquely do. Now they're going to do it on youth unemployment. They will always use the rouse that we're going to change our methodology. We don't like how this is coming out. It's not the real facts, so we will stop. Can you imagine doing that in the United States? Not going to happen. That's for the real world. We have talks on the Actors Guild and SAG writers, screenwriters. I didn't mean SAG. Screenwriters. They are meeting this Friday, and I got my fingers crossed. Maybe everybody can get closer and closer. If you talk, you reach a deal. If you just don't talk, nothing occurs. So, we all want entertainment. Our lives are hard enough. We want that, but we want things that are fair and people to get paid for what they've got. And the studios make enough money to share it. That's always been my viewpoint. I want to come out before I go anywhere and criticize President Biden again. I'm sorry, I have a real problem with watching our state of Hawaii in terrible distress. Our president sitting on a beach with his friends, having a beer or whatever he's doing, and he hasn't run there. I am not expecting our president to pick up a shovel and do anything like that. But I am expecting that this fire deserved his full attention immediately, not on a beach, but get on a damn plane and go visit the state, show the people you care. It's not about politics, Joe, or is it? This is about politics. It'll get you a few votes. Maybe the amount of people in Lahaina aren't enough. I don't know. But it goes a long way in America to look at this disaster. We can't help them. I mean, we're in mainland, they're over there. What are we going to possibly do? But our president should have been there right away. If I were a guy in an office like that, a governor, a president, whatever, you're there. You don't have to be there every day. You're going to get in the real worker's way, but you're there for the support. We don't even see that on TV. I really believe that. So, critical, absolutely. This man only cares about a vote. All right, that's my thing on it. I'm aggravated, okay? As you can see, I care for those people. All right, in the S&P, sinking back, down, if you will, 60 basis points for the week. Okay, it's not the end of the earth. Could we be going back to the 18-day average of closes, though, at 463, let's call it 464? We could. That's a logical target. If we take a look at the chart pattern, it is one that we have with, if you put the swing line on, see the brown line? That is something I developed so I could convince anybody, including you, that you could sit in a room, put this on, and tell your friends what the trend of a market is, what the risk associated with being, if the trend is one where lower highs, lower lows, what's the risk of being short? Well, you break the pattern if you get over 45.1775, you're at 44.54.50. That's your risk. Multiply it if it's a futures contract by the amount of what's each point worth, and you get it right away. Second step, you're under the 18-day average of closes. I have an automatic downside bias. Number 3, moving averages are all down here, so I'm looking at Bollinger Bands. And when you're hitting them, I'm looking for spins away from them, but you can fall to lower levels. Now, this in this chart says that you might be going to the 100-day average, not to the 18 on the weekly chart. You see the difference? Always got to pay attention. When we come over here and we look at momentum, is it embedded or oversold? So both numbers are under 20, but you can't count today. We don't know where Wednesday's going to finish up, so let's get rid of Wednesday. We go to Tuesday, both numbers under 20. The day before, both under 20. The day before. If you've taken my course, you know there with the action today on Tuesday, you got your embedded reading back. All right. So if you got your embedded reading, that tells me that on rallies, this market's going to continue to get sold until the red line closes over 21. Can't be any clearer on my idea on it. In the NASDAQ, embedded reading, I'm looking on rallies like this for the pros to sell it. I think today was their sell day, and I think they're going to look for that Bollinger Band possibility. Now, there is one more number that I use that I don't show you here, and it's called a window envelope. I show it in my morning subscriber video. Now, in that video, before we go on to other charts, it's part of my full research package. And in it, the charts will look a bit like this. You'll have your Bollinger Bands, but you see these blue lines? That's the first of the window envelopes. You could have 3 of those. You've got your slow stochastics, your Bollinger Bands, all with it. And I review with you every morning. About 5:15, 5:10 in the morning, I start recording, and I'll go through daily charts, weekly charts, a conglomeration. On the weekend, it's all weekly charts primarily, and a few daily charts. Coupled with this, you're going to get my newsletters, all right? They come out. My recommendations to buy will be in the green. I want the market go, go, go. And short sales in the red, go down, down, down. And that's how it does it. It's not Christmas, all right? But it is if you're right. Am I correct on that? I think you know that I am. I published a newsletter, just so you know, Monday through Friday, twice a day minimum. Fridays in the morning, Sunday night. Special updates. Comes out, like I said, looking a lot like what you're seeing here. And I prove points by going through the charts. So I am a chartist at the end of the day, but the newsletters, the way that I write, I am not writing books daily. I've written a book, The Psychology of Smart Trading. Go look for it on Amazon many years ago. I write in this format. I give you the news, I give you a synopsis of what it's all saying and how I would be interpreting it, and we move on. Why? Because I don't want to take your time, and I don't want you to be reading novels from me every day. I used to get letters from Dennis Gartman and people like that. You ever read one of them? First of all, Dennis writes beautifully, all right? He has a vocabulary that I have to have a dictionary next to me when I read it. And he's a very good person to get a big picture from. But as you read it more and more, you realize in order to fill up that much of a letter day in and day out, and he's now retired from it, there's a lot of repetition. And I'd see it over and over. In fact, I could see where he's copying phrases and doing it. I mentioned Dennis because, number one, I like him a lot. Number two, I respect what he did. So this is not a negative in any manner. This is praise, if anything. I liked his bigger picture concepts, and they were quite good. As for the trades, I'll do my own. But the concepts I like because they lead me into something. Well, I learned that I want to get to the point. So from him, I can tell you, I read so many newsletters, it's crazy. And you learn how to do this. You learn how to put it together for my type of wanting to teach and bringing points to people. Am I for everybody? I am not. But I'll give it to you free for 2 weeks for you to try it out. Pretty simple. Go to our website, iraepstein.com. Free offers on the top left. You can move your cursor here. You can call my staff. So now let's get back to where we're at. And by the way, though, you can move your cursor at any point all through this. In the Dow, you're down to the Bollinger Band. Now, one of the things I did is I told traders, stay away from this. I said, I think we're caught between the Bollinger Band going sideways, and until it pushes itself out one way or the other, use extreme caution. So you've gotten, with today's action, new sell signals, but into oversold market. I teach you don't deploy new money when you're oversold or overbought. The Russell, are you going to embed? You're not there yet. You're trying to do it. Notice how you got the gorilla glue trade. What's the logical progression? If the market keeps going down, these two moving averages are waiting for the market. It begins at 1871. If it embeds, rallies become a short sale. Let it prove it can embed. In the T-bond market, I'm doing right now another special video report. It's going to be on the T-bond market. I laid out all the charts today. Tomorrow I'll do the price count work, get the seasonals for you in there because there are seasonals at work, and I'll put this out for you probably tomorrow. So be ready for that, and you'll see an ad on that as well. And I really think I'm on the money with what I did with the stock index reports that were, a week ago? And I told you, August, September, weak period. Sometimes September is even weaker than August, depends how you look at it. But these are the two roughest months typically of the year, and it's certainly acting that way, and I'm seeing that. In the 5-year note, no, you're not going to get me into wanting to get super bearish against the lower Bollinger Band. You do it. I don't want to do it, nor am I bullish. I don't want to trade. I see sideways action. Can the market break out? Well, I tried it once here. It didn't succeed. If it does, you're going to get higher rates. But you have to embed when you're against the Bollinger Band to really keep it going down. That's asking a lot. In the dollar, you're fully embedded. That's the first thing my eye gets trained to do. I'll train yours. If you take my courses, you'll go, whoa, I see just what he was talking about. Number 2, you're over the 18-day average. You're only bullish. Number 3, you're getting a bullish crossover. The 18 over the 100. You normally make a new high after that. You've already hit the Bollinger Band. You're ripe to go for it again. It wouldn't surprise me. And that is your resistance point. The battleground right now is between the 200-day average in gray, the upper Bollinger Band, and no, I'm not looking for a top. I don't know how far it wants to extend, but it can go. The U.S. has got the market, not the Fed, the marketplace doing the Fed's job for it. Interest rates are moving up almost by the day. You know what 30-year mortgages hit today? Fixed rate, 7.26%. Do you know that mortgage applications are up, not down? I was shocked to hear this afternoon. When we take a look at the eurocurrency, still bearish, probably going to the lower band. Wouldn't surprise me if it wants to get down there, and the 200-day average. Now, are we embedded? Let's take a look. Again, you can't count today's action because we don't know where the market's going to finish today. But we can certainly look at the close of business on Tuesday. Remember, we're already in Wednesday's trade. Both numbers under 20, both under 20. Uh-oh, was it this way day before? No. So today, Wednesday's the key. Is it going to embed or not? Markets typically don't embed. Just remember that. So wouldn't surprise me if the market wants to get a little bit of a spin. On the British pound, I remain in the bear camp, but it is very oversold and caught in somewhat sideways action in the marketplace. Bitcoin, I find it interesting that Binance filed a protection order against the Securities Exchange Commission. We'll see how the courts look at that. I find it hard to believe that they'll get anywhere with it. They are being harassed. They've done everything that they can. They have to learn. If you're going to take on Uncle Sam, the deck is stacked against you. And if you're going to fight him, I know you're very rich. The company's got a lot of money. They're going to go through it. I can't make it any clearer. Just each step of the way. I've seen this, been around this. My age shows it. Thank God I haven't been involved in it. But you learn. And what you learn is you either go into the compliance or these fights get protracted. And guess what? The people that you're fighting, their goal is to get out of government into private practice. Just listen to what I just said. Very few of the practicing lawyers want to be a career person for the government. They want to make a name on you if you're the one they're going after, and they want to take their skills. Look at how good they did in the prosecution. They could be a phenomenal defense person for you because they know the routine. That's how it works. I did go to law school. I didn't finish, but I did go to law school, and I liked brokerage. I happened to get a job on the exchange floor as a runner, and law school would begin, I think, at 1:30 in the afternoon in Chicago. And the exchanges, I don't know if you know it, used to close at 12:30 at the old Chicago Mercantile. It was perfect. I work in the morning, then go, burn the candles all night. And I kept looking at them going, this is what I really love. Why am I going to law school? And that's what happened to me. Brent versus October, Brent and WTI still moving out, again, over that number. And once you get over it or under it, it seems to run in a streak. I think if you look at that, you get a feel for that. And it tells you that, okay, if I'm going to be a buyer, I want to buy the Brent over the WTI. It's stronger. Well, this one's holding the 18-day average, but I want you to pay attention. Notice how the red line finally spilled under 80 and the market returned to the 18-day average of closes. Look at WTI. It happened earlier. You lost it there and you returned. Now these markets are at their neutral territory in terms of chart action. Number two, they're working off and generally have worked off being, you go from embedded typically to overbought if you had a bullish embedded reading. And then you get into neutral where both numbers are under the 70 level and now you're looking for the game to reinstate itself. That's exactly what I think. So at the end of the day, so far, this is no more than a correction in a market that's otherwise still bullish. Gasoline, overbought. It was embedded back here at lows, had it, went up, made a new high, finally got back to the Bollinger Band and let go again. You learn this in the courses that I do. Now, nat gas. In Europe, nat gas prices are soaring. And the reason is they're fearful there that they're going to have to compete with Asia if, and the word is if, the nat gas companies in Australia go out on strike. We don't know if they will or won't, but if they do, going in at this time of the year where everybody's filling up for the winter there and here, that creates a problem in the Northern Hemisphere. We in America are fortunate, all right? We have plenty of natural gas. But I wouldn't get overly bearish here, and the reason is while the trend is down, the bias is down, momentum's down, you got to prove to me you can get back and stay under that 100-day average. The market is in a pattern where it's trying to say something. I think it's trying to say it really wants to hold that and try to build to higher prices. Don't know why, but that's what the chart action looks like. So you put it together, you come up with game plans, and that's exactly what I try to do. And that's what I do with you, and I try to do my darn best in my complete research. So again, give a click up here, get your 2 weeks free to it. You can call my staff if you have problems, iraepstein.com. If that link doesn't work for you, free offers. And by the way, take advantage of the other free offers. They're all there for you. I'm Ira. I'll see you tomorrow. Have a good day.